Well, folks, I'm sure you opened up your portfolios here today and you noticed that you're probably up thousands of dollars, maybe tens of thousands of dollars in your portfolio here today, right? Stocks are skyrocketing. Certain stocks are skyrocketing, I should say. And a lot of people are wondering, like, what is going on here? Is this sustainable? Are we about to drop back down? Should we, let's call it take some profits, right? Cash out in those sorts of things. And so in this video here today, I want to share my thoughts on this, right? Because obviously we're talking about these are huge sums of money now at this point in time, right? Public count up like $48,000. I still remember how excited I was to get a job at Quick Trip in 2010. Starting at $39,000 a year, right? And to make $47,000 off one portfolio in one day is pretty extreme. And if you look at these moves, right, Meta hit 260 today, 260 plus, right? That's a stock you could have bought for $88 9 months ago or so, right? Another 3+% move here today with Meta, almost $17,000 just there, right? Tesla all of a sudden's climbing back very nicely. That one's flirting with going over $200 a share, right? And remember, at the start of this year, it was like what, 101, 102, up almost 5% here today. Corsairs flirting with going back over 20. Amazon, a 4.5% move for amazing on here today. Skyrocketing Solutions even getting in on the fun, 5.8% move. Palantir, another one, a 6% plus move here in regards to Palantir. And so a lot of people are seeing this, right, and wondering what the heck. Is it jump on the bandwagon time? Is it cash? And those sorts of things. So that's what we're talking about here today, folks. I'm going to give you my full in-depth thoughts on this. I appreciate everybody joining me, as always, for positioning in the market moving forward now at this point in time. Make sure you get in the Patreon. That's pinned comment down there. I just posted my moves 2 hours ago. I bought 3 stocks here today. One is a dividend stock, and the other 2 are growth stocks. You get to see the moves I'm making every single week in there, plus be part of the Discord chat as well when you join the Patreon. And right now it's $19 to get in there. I am going to be going up to $25 sooner rather than later for anybody that doesn't join here in the short term. So if you are interested in getting in there, make sure you get in there ASAP. Also, if you're looking to apply to join my private group next week, check out the description area. There's an application down there. Okay. Alrighty, guys. So I want to actually start this video with a stock that I would say 80% of you guys probably never heard of, okay? And that's perfectly fine. Unless you're super into the market, you probably never heard of this company. Marvell Technologies, okay? This stock has climbed 44% in the past 5 trading days. Now, Marvell just came out. This is not even known as necessarily an AI play. But even they're getting in on the AI fun. They said they're going to do $200 million roughly in AI revenue in this fiscal year, then $400+ million in fiscal year 24, and then $800+ million in fiscal year 25. Okay. Now, when you hear things like that from a company that's not even known as really like an AI play, you should kind of. The bottom line is, okay, this AI stuff is for real. It's here now, and it's not going anywhere, and it's going to get a whole lot bigger. A lot of people have been debating this. There's no debating this anymore. If you are still in the debate mode, you just are not looking at facts and looking at data. When you hear company after company after company that are in the AI space saying interest and demand for their product is an overwhelming point at this point in time, right? You're going to see this reflected in numbers over the next several quarters and several years, right? And when you hear a company like Nvidia come out and say we're going to do $11 billion in revenue next quarter, you need to take that serious. Now, there's some people debating like, oh, what if they don't do 11 billion? You think they would come out with that crazy of number unless they were very confident they're going to do that number and probably beat that number, right? Like, you think they're just going to throw a number out there to throw a number out there? Come on now, right? A company like Marvell saying we're going to do these sorts of numbers, you're hearing it from company after company that are in this space, right? This isn't hype. This isn't just there's nothing here. There's nothing of substance. Okay, this is real. This is happening now, and this is going to get a lot bigger. Okay, and so you're either positioned for this wave or you're not positioned for this wave, and it's really up to you if you want to position or not. But there's no more debating. There's no more debating. If you're still in the debate mode, you're in the delusion mode. That's a bottom line with that. Okay, now this is not an everything goes up phase we're in right now, okay? Because there's a lot of stuff that's struggling out there. Look at Bitcoin. Bitcoin in the past month is down 5+%, right? So there's certain time periods in the financial markets in general where everything seems to be moving up. It's the NASDAQ, the S&P, the Russell, the Dow, Bitcoin, Ethereum, everything is just up, right? and it's just like a melt up. We're not in one of those situations right now. Okay, this is not a risk on everything. You look at the Dow is down almost 4% in the past 6 months here, right? It certainly doesn't feel like a great time for the Dow. The Russell 2000 is down over 6% in the past 6 months. And I mean, you pull up a 5-year chart of the Russell. It's hardly done anything in 5 years. Look at the Russell prior to Rona versus now. And what you're going to find is the Russell has done almost nothing, okay? Silver is basically about flat in the past 6 months, and that's after. Remember, it was red going into today, right? It was up almost 2.5% here today. This is extremely important for everybody watching this right now to see this, okay? This is GSG, this is a commodity index. This is down 8.6% in the past 6 months. This matters in a significant way. This is one of the guiding, in my opinion, guiding lights of inflation. And if you're worried about inflation or not worried about inflation, this is something that's going to take you there in a major way. Crude oil, right? Down 4 or 5% in the past 6 months. Oil just hasn't been able to do anything. And here we are, getting ready to go in summer, and oil's just, it's just not moving. And June's going to be here in a few days. Like, this is a time period, June, July, when you expect oil to be skyrocketing, and it can't get out of its own way right now for whatever reason, okay? Now, this is huge, okay? Truflation numbers just came out, 2.86% now at this point in time. 2.86%. Now, something's funny about truflation, because the bears, the short sellers, they love to show truflation last year, right? And they love to say, oh, the government numbers are wrong, look at truflation's at double digits. And now the bears and the short sellers, they don't even want to look at this number. And now all of a sudden it's like, oh, truflation numbers are wrong. We're actually at 5% CPI right now or whatever, okay? And it just cracks me up, because it's like, oh, so it wasn't real last year. It wasn't accurate last year, or it was accurate last year, right? When it was going your way. But now that it's not going your way as a bear or a short seller, it's like, oh, it's not accurate anymore at this point in time, okay? That cracks me up, right? That cracks me up. That just like shows the delusion out there that goes on. And I don't know why people do it like that, but they do it like that, right? The bottom line is, we're officially winning the war now at this point in time on inflation. We have not won yet. The battle's not over yet. But dang, it's looking pretty good, okay? And the other side's going to have to surrender sooner rather than later in regards to this, right? Now, I thought this was interesting, right? Policy error Friday. And I have to mention this along with this because it's an important subject, right? The Fed uses backwards-looking data that lags approximately 2 months. This is why Powell kept the quantitative easing well into Q4 2021. Why doesn't the Fed utilize real-time data? And it is a good point. We all know the Fed went way too far on the other side. We were all experiencing, anybody that ran a business out there, and if you ran a business out there, you were experiencing inflation in 2021. You saw it for your business. There's no one I knew that ran a business that wasn't seeing it. And there the Fed was just acting completely delusional, like there was no inflation. Especially in the back half of 2021, we were like, have you seen what's happening with commodities? Have you seen what's going on out there? Prices are going insane. And yet the Fed was asleep at the wheel. And that's because they're looking at backwards looking data. Same exact thing now. You still hear the Fed talking tough. And like, oh yeah, well, we might pause, but then we're going, rate cuts aren't even on the table. We might still raise rates more this year. You hear them talking tough, and it's like, dude, you don't have to talk tough anymore. A few months ago, sure, there was a situation, but not anymore now at this point in time. The CPI numbers are about to come in at 3s and then 2s. If you're still talking tough, like there's no reason to be doing that anymore now at this point in time. Absolutely no reason. The bottom line is this is all going our way now at this point in time. And that's great news. That's absolutely great news. Now, we have it good in the United States. Things are getting a lot better. But I can tell you it's not like that all over the world, okay? There's other places that are facing very hard times still, unfortunately, in relation to inflation. And so to those folks, that stinks. I wish it was better than that. And I hope it does get better. But for now, it's tough sledding there, okay? I hope at this time next year, you guys are in a lot better place than where you're at in terms of that. That's tough, okay? But in terms of the U.S. market, yeah, we're looking better and better and better and better, okay? Now, is the market overvalued right now? Let's talk about that, okay? Here's what's going on with the market. This looks at forward Ps, which I always, in my opinion, is the most important metric you can ever look at if you're judging a stock, if you're judging the markets in general. There's nothing I believe is more important than forward P. Everything's important. Price to sales ratio is important. Trailing 12-month PE is important, right? Cash flows are important, right? A lot of things are important. But this is the most important. At the end of the day, I want to know what companies are expected to earn over the next year. What's the consensus estimates? What are the companies expecting to earn over the next year? Because I'm buying this for the future. So I want to know what I'm roughly paying based upon what happens next year. Not based upon what happened last year. Last year could have been horrible, and now it's going to be a lot better. Last year could have been great, and now it's going to be horrible, right? I need to know what I'm paying now versus what future earnings are, okay? And so forward P is always my number one favorite metric over every other metric, and I always, it's been like that for 15 years. I think it's going to be like that 15 years in the future, another 15 years in the future. I don't see that ever changing. As long as I'm in the markets, I don't see that ever changing. Large caps are trading at about an 18, roughly forward PE ratio right now. So still on the higher side when it comes to those. But we'll speak about why those are trading higher in just a moment here, because there is very important reasons on why this is happening. Mid caps are trading still very undervalued, 12.9. S&P 400 mid caps, still very, very cheap based upon the last several decades. And small caps trading at 12.7, S&P 600 small cap, which is extremely undervalued compared to any time period in the past, many, many decades outside of the great financial crisis and actually last year, right? And then, of course, the crash of 2020 that happened there. And so when I look at this, the fact is the market is not overvalued. Large caps are trading rich. Mid caps are trading undervalued. Small caps are trading still significantly undervalued now at this point in time. So that's that, okay? Now, if you want to say, well, is the sentiment of the market changing for the better, right? We can take a peek at that. This is from our investor report that we put out every single Friday inside the private group. We put out this very comprehensive report that looks at a ton of different informations and things like that. This is just one of a million slides we got in there. It just takes a look at AI investor sentiment. And in terms of this is where we're at right now this week, okay? So this is how investors are feeling for the stock market for the next 6 months. Now, these numbers have been horribly bearish for basically a year now at this point in time, okay? And we're still no difference, okay? There's only about 27% of market participants are bullish on the market for the next 6 months. Almost 33% are neutral, so they're not bullish or bearish, right? And almost 40% of market participants are bearish on the stock market the next 6 months. It's been like that for a year, folks, okay? And in terms of the 1 year bearish high, we hit that in September, right? September 21st, 2022, which, by the way, you should have been loading the boat on stocks in late September and all the way into October, November. That was a phenomenal time to be a buyer of stocks. Usually whenever the sentiment gets insanely bearish, almost every single time you're buying, and this is why this market is so hated, because everybody's been so damn wrong. That's a fact. The bottom line is when it comes to sentiment, they've been dead wrong for over a year now. They've all thought we're going to be tanking more and more and more and more. And meanwhile, you look at the NASDAQ, you look at a lot of the biggest big dog stocks out there, and they're doing tremendously well. Their earnings haven't, fallen to pieces, and they're actually going to get a lot better. We'll get into that in just a moment. And the bears are out there looking, and they're just kind of in delusional mode, right? They've been wrong. That's why this is how you get into such a hated bull market. This is the most hated bull market I've seen in terms of the NASDAQ stocks, probably since I've been in the market, because people are looking and they're so badly positioned. They're all piling into oil and gas type stocks and the safety plays in the middle and the end of 2022. And they're all piling into short positions, put option positions. This is where everybody was piling money. And now they're looking and they're watching these easy money stocks go up 50%, 100%, 150% in a snap of fingers. And they're looking and they're like, they've lost everything in terms of short positions. They've lost everything on put options. And in terms of their safety stocks and the oil and gas stocks, those sorts of companies are not doing well. Their stock prices are down significantly from where these folks were buying them. And they're screwed. Because now they're looking like, wait a minute. I wasn't buying Nvidia at 108, but do I pile into Nvidia now at 380? They're screwed. They don't know which way to go. And if rates drop, it's going to get way more extreme. Because then you're not even going to be able to earn any good money on treasuries like you've been able to earn recently, right? And we know if rates drop, guess what else is going to drop? Savings accounts. So all of a sudden you're looking and you're like, crap, what do I do now? What do I do now at that point in time? And especially if the economy hasn't fallen to pieces and we don't have unemployment of 6, 8, 10%, what do you do at that point in time? Then you're sitting on cash while it gets devalued constantly. You're not long the market. You're watching all these companies prosper. Their earnings come in better and better and better. Your doomsday scenarios weren't playing out. And you're screwed. And this is how you get the most vilified, hated bull market we've seen. And I can tell you, it can get a lot worse than this. And I mean a lot worse in terms of the hatred of this bull market. Oh my gosh, you haven't seen anything yet. If you think this is a hated bull market, just wait. That's all I got to say. Just wait on that. Now, let's go through the most powerful companies in the market. The ones that shake the market, the one that move the market up and down. Okay? What's going to happen with these companies' earnings in the back half of this year? I'll tell you exactly what's going to happen for all 10 of the most important companies in the world for their earnings per share in the back half of this year. Microsoft's going to be up very nicely. Apple is I would call it a wild card. Could be down, could be up. I don't know. Okay. Wild card for Apple. Amazon's going to be up substantially in the back half of this year. I mean, you're going to see their EPS and net income climb like you haven't seen it climb in years. Nvidia, oh my gosh, you haven't even seen net income in EPS until you see Nvidia's numbers in the back half of this year. Google McDougal, I've seen ad rates really stabilize and actually start moving up here recently on YouTube. That's definitely a good sign in my opinion. Also, from what I'm hearing from several different sources, the advertising market has stabilized, and if anything's getting slightly better now. Not like great, but a little better, which is important. So don't be surprised at all if you see Google earnings improve quite a bit in the back half of this year. Meta, oh my gosh. Wait till you see Meta's net income in the third quarter, fourth quarter, first quarter next year. Oh, baby. When you see that growth, socks are going to be knocked off. I think Tesla's a real wild card on what happens with their earnings per share. Broadcom, I don't follow the company close enough to really have a strong opinion either way on Broadcom. In Pepsi, I'm pretty confident you're going to see their earnings per share and their net income go up quite substantially in the back half of this year. So which means if all these companies are going to report these great earnings per share and net income in the back half of this year, which is what's going to happen, how do you get the market down in a situation like that? It's very difficult. Very, very difficult. Especially when the market's already so damn fear-driven. If the market wasn't so fear-driven, then you would say, well, maybe there will be fear that creeps in. Yeah, maybe all these companies report really good numbers in the back half of this year, but maybe some fear creeps in the market, and that pulls the market down in the back half of this year. The problem is you've already been insanely scared for over a year now. So the people that have been, are of that time the market, let me try to get out, all those sorts of thoughts, right? They already got out a long time ago. They got out 6 months ago. They got out 9 months ago. They got out 12 months ago, right? And now they're sitting and they're just like taking these massive losses and watching all the stocks they sold out at stupid prices go up substantially. There's a great saying, don't time the market. Time in the market beats timing the market, right? And the problem is you get a year like 2022 that stocks went down so much so fast, right? You're talking about from where the NASDAQ peaked at the kind of the end of 2021, the fourth quarter of 2021, through the third quarter, right, around the end of the third quarter of 2022, we're talking about in a matter of, less than a year, the NASDAQ peak to trough went down 37+%. When a situation like that happens, a lot of people start thinking, oh, I should have timed the market. And they start feeling like maybe they can time the market. And next thing you know, they're making very questionable decisions and they're selling out their entire portfolios. They're selling all their best stocks possible at 52-week lows, multi-year lows, 10% off their lows, and making these such questionable decisions when they should have just held through or been buying the dip. If these are truly great companies that you were invested in, why were you selling them? You should have been buying the dip, right? Why would you sell Meta at $90 a share? If you really believed in Meta and you thought it was a great company and you were buying it at 300, why were you selling it at 90? Why weren't you buying more shares? This is where it comes to building out great diversified portfolios. Now, in terms of how I'm positioned in the market, I got to say I I'm in the best position I've ever been in 15 years being in the stock market. I went from last year being in such a bad position, so far offsides, to such a perfect position now. Regardless of what happens in the market, I'm going to thrive. The market keeps going up, $50,000, $100,000 a day. Boom, pour it in, pour it in. Market goes down substantially. I have several hedges on in the market that will print me money. If, for any reason, this market tanks in a major way, if this is a kangaroo market and we're up, we're down, we're all around, and there's continues to be cloudiness and clarity, you know me, I'm always a buyer out there, and there's a lot of tremendous opportunities in this market right now. I mean, tremendous opportunities. I'm talking about stealing money opportunities. PayPal, in my opinion, I've looked at that company 58 different ways, 58 different times now. And I see no way in which I don't make a substantial amount of money in PayPal over the next, I would say, 2 or 3 years. And so I'm going to continue to be a big buyer of that stock. That's the easiest money I've seen in the market since Meta last year in the fourth quarter of 2022. I haven't seen something that easy from a risk reward standpoint. So there's a lot of tremendous opportunities out there. I was out there buying stocks here today, right? Different stocks, though, than I was buying 9 months ago. Yeah, I'm not buying the same stocks. 9 months ago, you might have saw me pouring massive amounts of money into Meta. Remember the day I bought $77,000 worth of Meta, right? Remember that? Remember somebody sold me Meta shares at $88.94? Those were different stocks, right? Beginning of this year, I was buying some Tesla stock. And now you see me buying different stocks. There's different opportunities in this market now at this point in time, right? And you got to be able to identify those opportunities. If you can't identify those opportunities, you know where you need to get. Apply for my private group. That's pinned comment down there, folks. Or no, it won't be pinned comment down there. It'll be for Patreon. They'll be in the description area. So anyways, guys, I appreciate you joining me. Much love. Stay focused out there. Take advantage of deals in the market. If you want to hedge your portfolio, you can definitely be hedged. I'm certainly hedged out there. I'm hedged in my Patreon portfolio. If you want to see exactly how I'm hedged in there, check out the pinned comment down there as well. So yeah, much love, folks. I appreciate you. Have a great weekend this weekend. Max and relax. Buy the dip, never trip. Make some dang money, man. There's a lot of money to be made out there, and there's going to be a whole lot more over this next few years. Much love and have a great day.